We are here today with Robbie, one of our successful Alpha Cap traders. He secured 18 payouts with Alpha so far, which is incredible. And this trade he's going to break down for us today on GU is one of the trades that secured him one of those payouts. So take it away, Robbie. Show us how you did it.
My thought process is always it starts off on the daily time frame. What I'm looking at is how is price moving, right? So and where is it trying to go to?
Okay.
So in this trade, if you just imagine this is the candle on the day that I was looking at. So we closed bullish.
Yeah.
So my bias for the next following day is still bullish.
Yeah.
And I was
and to cut in, you are a bit of a higher time frame trader, right? So
I am a slightly
I guess
higher time frame trader.
daily bias is probably pretty important, right?
Correct, yeah. And also I identified this fair value gap here on the daily candle that from like a few weeks ago that I left behind. So I was thinking that would be the drawn liquidity. So then that's not really my main time frame. The 4 hour is my main time frame where this is where like things start to come together. So on the 4 hour, I can see that we're bullish. We're still holding bullish structure. So my bias is now officially bullish. I'm only looking for buys. I drop down to the 1 hour and I identify this area of demand. Now, once we tap into this demand, I drop down to the 15 minute. I see this break of structure on the 15 minute. We then come back into this area, into like the neckline. Some people call it the neckline or whatever you want to call it, area of this is where I know that the fair value gap is going to get filled and this is where it will move from. So then I enter from this area with my stops below so typically I would actually give my trades more breathing room, but I went a bit aggressive on this day. And I put my stops below this structure level.
Bit of structure, yeah.
The structure level. Where I put my TP is, like I said earlier, I just targeted the fair value gaps that were left behind. So sorry, let me go to the 4 hours so you can see more clearly. So I was targeting basically in this area here. I was thinking price would get up to here, just because because I've never taken a mentorship. Everything I know is just from observation. So I just know how price moves, sort of thing. So I just know that price is going to come to fill that area. Like I told you in my podcast, I didn't even know what a fair value gap and breaker structure was. So they're just terms, right?
Yeah.
So for characteristics of the market. So I just knew that I think price is going to come into this area before then reversing, or it could break through. I don't know what's going to happen next. I just want to make my money and get out. So So going back to the 15 minutes, break down a bit more why I did what I did. Once I got my entry in this area, it did sit around for a few hours actually, and then we started to get a push during New York. And then once we got into this area here, I did start, but this was just before FOMC actually. So I was contemplating whether I close for my 1R or if I just hold it. And fortunately, in this situation, I just held it because I didn't want to close the trade just out of fear. I wanted there to be reasoning behind my closure, and I had no real no like proper reasoning for closing the trade. So then I held the trade literally in like 15 minutes of opening of the FOMC news. My TP was a little bit higher, to be honest with you. It came all the way up here, and I passed a challenge, and I also got one of my accounts, my live account, out of drawdown, and I got a reasonable payout. So then I was like, there's no point in me being more greedy and waiting for it to go even further up. If I'm happy with this amount, let me just close and just be happy. And the good thing I did, because if I literally held for another 15 minutes, I was never going to see that money again. Like that would have been gone.
Wow.
So that's it. The thing is, my strategy is like quite simple. It's basically just aligning all the time frames and then just it's nothing special, but it works. And
well, like you said, going with the current momentum, not trying to fight it. I mean, the benefit to that is it kind of goes against a big problem that a lot of people have, which is the opposite, right? Is like trying to catch the reversal all the time and saying, well, we're overextended, we're going up and up and up, so it must be going down at some point. And sometimes rather than guessing when it's going to turn around, is just saying, okay, well, daily's bullish, 4 hours bullish, 50 minutes bullish, let's just buy and just ride the momentum. So that's really, really cool. So where you've got a breaker structure marked up, like how are you determining a breaker structure? What do you need to see to say I'm convinced that?
So my thing is always, so I don't use, like I said, mine's 15 minutes. So you on the 1 minute and 5 minute, you'll probably see a break of structure even before this break of structure, right?
Yes.
But with me, I don't go below 15 minutes just because I haven't got a good record with it. And with my data, I find that 15-minute break of structure is more valid. So how I define it is basically the last. So for this one, it's the last down candle before that caused the low. So then once the last down candle that caused the low got broken, now I consider this a break of structure.
Interesting.
But I know some people will enter straight on the break of structure, so they would enter maybe like here.
Mm-hmm.
But I also know that the market likes to retrace back into that area. So for risk to rewards, and also not because sometimes with experience, I know that once this gets broken, this could just be a liquidity sweep, and actually it could then just reverse straight down, right? So that's why I'm waiting for extra confirmation. So I wait for something here like a double bottom or something just to show me that the market doesn't want to go down anymore, and then yeah. So in this situation it worked out, but sometimes it doesn't work out. But you just need to make sure that you've got a good risk to reward. So in the situation I made nearly 4.5 R which is pretty good.
Yeah, that's huge. Yeah.
So sometimes you just need to wait for an A+ setup and take it when it comes.
Exactly. And I think this comes down a little bit to what we were saying in the podcast about if you take 3 losses before that and you take that trade, you're up, right? Like that's exactly. A profitable trader. Whereas a lot of people will take 3 losses in a row and say, well, my strategy just doesn't work.
Like with me, I would say I have a slightly lower win rate typically, just because I do use slightly higher risk to rewards.
Yeah.
Sometimes having a higher win percentage is better for your psychology.
Yeah.
Just because you can even if you go for like a 1-to-1 or a 1-to-2, you can get those you can just chip away daily and you get those wins. Whereas I guess my issue is my strategy doesn't show up often. So when it does show up, I just want to make sure I'm banking as much as I can, sort of thing.
Yes.
Because for me, if I see my setup 2 times or 3 times a week, it would hurt me to only take like a 1-to-2 or a 1-to-1.
Yeah.
And the thing is, because I'm confident in my strategy, I just think I know majority of the times it will get up to a 1-to-3 or a 1-to-4 even. So that's why I don't have a slightly lower risk to reward ratio, and I go for something a bit more rewarding.
Do you ever use like a fixed risk reward ratio, or are you actually looking for a target and saying this is where I think price should go to, so I'm willing to hold it to there?
It depends. Sometimes I'll go for like a fixed 1-to-3, and sometimes depending on the situation, I'll go for like the next 4-hour fair value gap or something like that.
Okay.
Something like a reasonable target.
Okay. And how do you decide which one you're going to do? Is it based on a different?
I think it's based on which one's more reasonable.
Fair,
So like if I think
if the fair value gap is like 10 R away,
if there's like liquidity been taken in a certain area. I know I didn't talk too much about liquidity in here, but it's I don't really look for liquidity. Like I know people look for sweeps and stuff like that. I don't really look for that often.
Yeah, fine.
Just because I don't need. Just because I know a lot of the times the price has already taken liquidity. It's just I'm not taking it into my strategy, sort of thing.
100%. Yeah.
But
yeah. Well, I mean, this was. I guess you can talk a bit about simplicity and this idea of simplicity.
Yeah.
Like, it's not necessarily about trying to overcomplicate everything, right? And it's possible to say, I understand there are concepts out there that have some value to them, but I don't personally look at that because I don't need to.
Yeah, of course. So, for example, I think the market reversed here because that's where a lot of the liquidity was resting. So I understand that. It's just when you're trading with the market, you already know liquidity is sort of on your side, sort of thing. So because I'm a pro trend trader, I don't really need to look for it as much. Sort of thing. But if you're looking for reversals, of course, you're going to need liquidity because you need to understand why the market would want to reverse, right?
Yeah.
Whereas like in a pro trend, I don't need a reason to look for a reversal. And that's the benefit of being a slightly higher time frame trader because I can just trade with the banks and whatever else there is.
Yeah, perfect. Yeah. Fun fact, Robbie's never paid for a course. Everything that he's learnt now from developing the strategy is from trial and error, experience, a lot of journaling, and from watching free YouTube content, just like you are watching now. So it shows the benefit of educational content just like we're making. Hopefully this has been educational for you. And if you would like to see more brilliant free educational content from successful traders, subscribe to this YouTube channel. So Robbie, thanks for joining us. If you guys liked it, like the video and subscribe, and we'll see you in the next one.